All right, what's up, everybody? This is the NQ3-6 Outlook and Review, which is a continuation from actually the 3.4 Outlook and Review. So let's go ahead and get into it. Review, so we're in the run phase on NQ right now. If you remember correctly, I stated that there's only two phases to the market. It's either ranging or it's running. And turns out that the analysis, the outlook that was posted in the last video was correct. We actually met that liquidity target not to about 5 minutes ago. All right, so let's go over that and then we'll go ahead and get on the charts and look what happened. So from the daily point of view, this is what we got. So the first line over here, that's showing the previous liquidity target, which we met, made a video on that. And then the current target, which I stated was probably going to happen based off of the reaction from something on this candle here, would be potentially we would be heading for this low here if we were to continue, which we did, the running phase of this current market. And that's what happened on the daily time frame. But I actually went a little bit deeper and said that it actually was on the 9 minute, but what ended up happening was inside of, or a little bit higher time frame, the 15 minutes showed it, was I was looking for a sponsored candle or point of interest rather to continue, or to continue the trades, the bearish sentiment here. And what ended up happening was it was either the last video or the video before that, I said that I was looking at that 9 minute candle. It looked apparent, or it looked like a great place to take a trade off of for me. And ultimately, it didn't hit the open of the 9 minute. When I zoomed out, it actually hit the 15 minute, and I was like, damn, I missed that. Well, it is what it is. But it's because it fit perfectly. The 9 minute and the 15 minute were perfect, right? But the 15 minute had a lot more characteristics for a sponsored candle than the 9 minute. As you can see, there's a lot more body to wick. You have the uninterrupted price action, the uninterrupted run here, following mitigation of inefficient pricing, right? We got basically there filled, and that was just right for, like, immediately caught my eye on the 9 minute, but I didn't check the 15 minute during that video. But ultimately, that's what ended up getting mitigated after the liquidity run here. And so, if you remember in that previous video, I said that just because we had a liquidity grab doesn't mean we would be reversing and going towards, the upside. Like I said that we needed more data. And because the macro bias, yes, we grab liquidity from a macro perspective at that daily liquidity point. The macro, in confluence with the micro perspective here, showed that we were still bearish, right? Everything here, everything is showing bearish price action. There's nothing here, even this liquidity graph, or even this liquidity run here, doesn't even show bullishness to me. If anything, this is more solidification of a range that's created, right? So we got liquidity run there. That's actually mismarked. This is supposed to be LQ. It's my bad. There's supposed to be a liquidity there, so we get solidification of the range. And so all of this was continuation of a run, and this was the origin of the move that started that run. So because we're in the run phase, we're just looking for opportunities for price to pull back any excuse to find an opportunity to enter, and that has just so happened to be this 15-minute sponsored candle. Now, I missed this 15-minute sponsored candle and ultimately ended up catching this trade over here, right? So, putting aside FOMO and realizing that, hey, I don't want to, just automatically enter, like try to frame up a trade. It's like, oh, before I'd be like, oh no, okay, we missed that trade. Okay, I see this. This is potential. This is price. This is a mitigation. We got a candle. We ran. Okay, yeah, this looks like inefficient pricing here. Oh yeah, we're gonna miss 50%. Oh yeah, this is great. This is running. I'm gonna hold it, move my stop loss to break even, and ultimately price ran up here. That's wrong. You can't just do that, because ultimately this run here, it failed to go take out this low. So if that's the case, this could be invalidated, and if this high was broken here, that could be indication that we would continue to the high side. But ultimately, I had to wait for more price action to print or more information to print on the charts to see if this actually will be the continuation of the run phase, looking at it from the micro perspective, because I'm looking for trades now in continuation off of this. And so something that I've noticed is that once price mitigates the origin of the move, it usually will give like two more entries before running, right? And what do I mean by that? So once we gave this mitigation, let me clear the chart actually. Once we gave this mitigation here, this first mitigation won. What ended up happening was we got a failed run here to take out this liquidity point. I would have loved to seen this run here to go and take out the liquidity point immediately, but it failed to do so. So because of that, this is now considered here unwillingness. And unwillingness, if you don't know it, go learn it from RCV concepts. It's essentially, what it says. It's unwillingness to continue to the low side. And ultimately, if I'm not mistaken, I believe it mitigated that candle there. Nope, failed to do so. All right, cool. So yeah, but anyway, that's unwillingness that happened. And because of that unwillingness, price ultimately began to ascend upward. But all of this doesn't really matter if this is unwillingness, because I'm sticking to the overall bias right now that we are bearish. And so what does that mean? That means that we have a micro perspective range here from that high down to, this low here. And so any excuse for price to come back up into premium and say 50% is somewhere there, I'm looking for price essentially to come back up into premium and give some sort of unwillingness again. Instead of it being in the discount, I want unwillingness up here, right? Failure to break this high, or I'd want it to have a liquidity grab of that high if that were the case, right? Either option would be favorable. So the first option won, just so you guys have something to reference. If I'm in a range, I want to see either one, unwillingness potentially inside of the run phase to continue looking for a trade, or two, I want to see some sort of liquidity grab, right? And I want to see a liquidity grab, not a break of structure. Why? Because in the previous videos, I've said that if we have a break of structure, that's more likely indication for continued price action and potentially a reversal here. So we would get bullish price action going that way. But we didn't get that, right? We got unwillingness, and that unwillingness sparked here from there down to there a nano perspective range, or really just a smaller micro perspective range from there to there in the premium. After we broke structure there, we generated some price action here, and then we caused a liquidity grab, and ultimately mitigating, which is the trade that I took, was off of this 15-minute sponsored candle there. And so let me go over here to the charts and show you what that looked like from here. And as you can see in live action, we're still running to the low side. But ultimately, this unwillingness being shown here, as you can see, we did not break that high. We got unwillingness shown there, and then we had a range created from that low down to that high, and ultimately, let me do this, 260, right. So we failed to go into the premium of this side, which is totally fine. And what was more important is not marking up this range inside of a range. What's more important to me is showing that, hey, we're in premium of, which I didn't mark it up, which I should here for you guys so you know what I'm looking at. We're in the premium of this range from this high down to that low there. Ooh, that's not it, 260. Right. So we're in the premium of this high here. So now what I'm looking for is any liquidity principle or structural principle play to give me an opportunity to enter in off of a trade. And so what we saw, first thing I saw was unwillingness. I'm like, okay, we got unwillingness. So now what I want to see next is potentially some sort of point of interest based off that unwillingness to be printed, and that would probably be on the lower time frames. But I was asleep during this time, and so I randomly woke up, which I often do, in the middle of the night, and I ended up finding it actually wasn't on the 15-minute. I think it was the 20-minute, if I'm not mistaken. Yep. It was no. It wasn't the 20 minute. Was it the 10? Yeah, 10 minute. Oh, but the 20 minute was a lot cleaner. Sorry, you're seeing like live of how I'd be doing analysis. I need to clean that up. But yeah, the 20 minute looked a lot cleaner than the 10 minute. Why didn't I enter off of that? Oh well, yeah, I entered off the 10 minute and gave a more favorable option anyway. And there was a liquidity grab here, and the reason why I chose this specific candle, this green candle to enter off of, one, once again, liquidity grab. Then we got liquidity grab of that liquidity grab right there. Okay, cool. We got uninterrupted price action running down to here, clearing previous lows. And ultimately, that was like, oh, okay, perfect. So let me enter in at the open of this position. I didn't enter in at 50%. I rarely ever enter at 50% of a position here. I always try to enter in at the open. I can start experimenting with 50%, but I like actually being conservative with my entries when it comes off of sponsored candles or inefficient pricing and just going ahead and taking that entry off the nearest point. So I usually enter in off the open, but this one absolutely tapped 50%, which the previous trade on that 9 minute sponsored candle I showed in the last video hit 50% as well, or did it hit the open? Can't remember. I'm sick. And ultimately, then you can see that that led to a very, very strong and continually strong run to that target. So, yeah. So now, once again, all that to say, we are still bearish on the NASDAQ. We are still running lower. And so, because we are still in the run phase, let me zoom out to the macro perspective here. And I'm now actually going to clear my charts. Knowing that we're in the run phase, there's no need for continued. Damn, that thing is dying. This is great. If you remember a few videos ago, I marked out a few targets. The first one was there. Next one was there. And I said, well, if we're going to continue to run, we're just going to start taking lows, right? So the next one is going to be there at 19,829. And ultimately, if we continue this run phase, next target, that low, next target, that low. But we can't just say we're going to hit all those targets. We need to see the price action, the structure that forms. We need to see if we break structure here at this low, right? We need to see if we break structure here at this low. We need to see, do we break structure here at this low? If we break structure here, more likely than not, we're going to continue lower. If we grab liquidity here, then we'll have to do a little bit more analysis to anticipate or react upon the reversal pattern, which was shown here on the micro perspective, failing to continue higher and shown to go lower. We will have to get favorable conditions for a bullish play or bullish run here that would shift the market sentiment from bearish to bullish. But right now, the outlook is we are still continued bearish, with our next target being 19,829.25. All right. So let me actually mark that up here so we have it documented, even though it's already in a video. Let's have it documented here is that the outlook is continued bearish. Excuse me. Continued bearish price action. It's horrible typing. And then liquidity target. I'm just gonna say LQ target. What did I say? It was 19,829.25. Yeah, perfect. Numbers. Great. 1928.25 or 19,829.25. That's our liquidity target. So, and that is if we get the continued bearish price action. I'm not out here calling trades. I'm just saying the most likely, based off the analysis that I'm doing, the outlook, this is the most likely next target. And I can only make, I'm being proactive with the reactions from, previous price action. That's really what you want to do here. So essentially what I'm saying is I'm not calling for price to hit this point. I'm saying this is the most likely area for price to draw to, as in based off of current price action showing that we have broken structure here. Our clear next target, our clear liquidity would be this point. That's the determined point of where price will be. What price will there will be heavy price action here next. Now, how fast this price action occurs, I don't know. The price could start doing some craziness. It could be doing ranging here for a little bit and doing, or it could just continue to just run like just straight this one candle. Like by the end of the day, it probably could run and hit that. But that's what you call speculation at that point. But the deterministic part of it is knowing that, hey, after we broke structure, knowing what phase we're in, we know where our next liquidity draw will most likely be, right? So yeah, that's it for the NQ3 625 outlook and review is. Let's see if the analysis plays out. If I'm wrong, I'm wrong. If I'm right, I'm right. And we'll come back and get more trades again. Let's make this money. Peace.